Bill here at the Metals Minute. Today is Monday, October 10th, 2022. We have some big news in the Treasury market. The US Treasury market is a large market. There's almost $24 trillion worth of Treasury assets out there. And the issue is many of the large purchasers, typically large purchasers of Treasuries, are stepping back seemingly at the same time. So we have a lot of foreign governments, such as Japan, for example. They are in a situation where they're trying to defend their own currency against a strong dollar on the international markets. And so they're stepping back from Treasury purposes. We see other issues in Europe right now as well. In Great Britain, for example, the gilts, that market continues to be under a lot of pressure today, with yields spiking on those bonds as they come down in price. And some are beginning to say that government bonds should no longer have the risk-free rating, or the risk-free idea that there's no risk in those bonds. Some of those have lost nearly half their value, and they're sitting in pension plans and 401k plans and whatnot, including US Treasuries. There's been record losses with those for asset managers this year. And so we have issues going on there. We also have a lot of news coming out this week. We have the PPI numbers, or Producer Price Index, will be released on Wednesday. Thursday, we have the much waited for CPI numbers, and also the numbers that will be used to determine the COLA for 2023 is coming out in Thursday this week. And so we'll keep an eye on that. The consensus is that CPI will be somewhere between 8.1 on the low end to 8.2 on the high end. As a reminder, it was 8.3 last month, or the previous month, and this will be for September's numbers. So given that information, if it comes in around 8.1, 8.2, we're going to see a COLA number somewhere in the range of 8.72, 8.74, somewhere in that area. We'll know more in just a few days, but that will make it one of the largest cost of living allowance adjustments since about 1981, back when we last saw economic conditions similar to what we see now. The question will be, is that going to help? And I suspected a few months ago that we would see inflation begin to come back up after the September date when the COLAs would be determined. And it looks like that may be happening. We're seeing utilities begin to rise. They're warning about utilities going to be rising to a higher rate over the winter time. We see fuel prices beginning to rise again here in the United States. And one of those reasons is we're exporting a lot of energy that we didn't used to export to Europe. And we're trying to help Europe out. And as a consequence, or one of the consequences, it will mean higher energy prices for Americans. And so prepare yourselves for that. Now we see stocks being sold down some this morning. We also see the metals. Most of the metals are down a little bit this morning. And that's something that we need to prepare ourselves for, and just understand that when things begin to implode like they have started to this year, often the metals will be caught in the downdraft initially, because people have to sell something of value to try to salvage other areas of their portfolio. And that typically happens, so that's not anything to be alarmed about. It's a good alert to purchase more if you can, because it's generally a short-term phenomenon during markets like this, before the metals really come into their own with these conditions. And over a period of just a few years in this type of scenario, it's well worth it to hold on to your metal if you can, and to purchase more when you're able to. And that's advice that we tend to follow ourselves, or we wouldn't be giving it to you. So that's what I believe, and I believe we'll be well rewarded for that. Stay tuned. We'll keep you posted on all the new developments as they happen this week, and it's going to be a busy week. Thank you for tuning in. Have a great day.